Welcome everyone to the Simple Markets channel. As always, my name is JB, and today we're going to be going over some analysis on pound US dollar. This analysis is from me roughly 2.5 years ago now. I believe it was back in 2022, and it was essentially my analysis on pound US dollar and my expectation that we were going to take this very significant monthly or yearly low. The low was formed back in 2020, and we were working within this general range of price. So I'm going to dive deep into the market structure here, and I'm going to show you what analysis led me to believe this conclusion. Yes, we are in bar replay mode here. But before we dive into the charts here, I'm going to put that video here for you guys to see, and please excuse the audio. It was over 2 years ago.
And another thing to keep in mind is now that the weekly is in unison with the higher time frame, the goal based on the higher time frame is to come and take this target. Now, what people do so many times is they see.
So after watching that video back from 2022, we're in the general area of my expectation here, where we have pound US dollar working within this general range in the break of structure, and then this lower time frame break of structure, leading me to conclude that most likely we are going to be targeting this overall range low. So the first thing I noticed when making that analysis was we have this very strong and impulsive pullback, followed by a very aggressive bearish move. Moves with such high volume like this create a fantastic trading range for us to work within, and we can expect that price is going to work its way back up into this general area, also known as a supply zone, to mitigate that area and then go and create a new structural low. Supply zones are created from these very impulsive moves that sweep liquidity and then break structure down right after, as you can see here. And a supply zone is when institutions buy very heavily before selling even heavier. However, if they do buy aggressively at this price of about 1.42, and then price drops very aggressively after, they are going to have to work their way slowly and surely back up to that level so that they can close out their positions and what's called mitigate them, and then eventually work their way towards the new structural low. This is why market structure works. It's embedded in the ideas of liquidity and volume in the markets, and how the institutions have to drive price in order for them to make returns on their capital. So once this break of structure occurred here, we now have a new lower high, followed by a new lower low in the market. So this is what creates a protected high and a target low for me. I just generally mark these up so I can understand what range I am working within. They don't have too much significance other than the fact that it swept liquidity and then broke market structure. And now, utilizing the idea of market structure theory, I now have the highest probability expectation, which would be for price to work its way back up into the new supply zone and then break structure of this overall target low. Keep in mind, as this is occurring, we have a consolidation range generally before the supply zone. And as we talked about plenty times before, this is what's known as inducement, or institutionally created liquidity, so that a lot of orders are pending within this general range, and then they can go and convert those into that heavy sell pressure that they're going to need to make it to this target low. So price, just like before, slowly and surely works its way back up to this supply zone, and then we end up mitigating that zone and forming a lower time frame break of structure. Now, if you've been watching my channel, we understand that the markets are fractal, meaning that the laws of structure are applying all within these lower time frames like so, as well as this overall higher time frame that we're seeing here as well. So once price is working its way up, let's change my color here. Once price is working its way up like so, and then we see a break in structure, we can now follow these structural lows and highs all the way down until eventually meeting that inevitable target. So this break of structure inside a supply zone with a higher time frame break of structure, all of these things combined lead for a very high probability analysis. And for those of you that are in my community, we focus on these general ranges like so on the lower time frame here because we are operating on a weekly time frame. And you can go ahead and actually set your order at the 75% of the trade and then target this red low here. And if you were really aggressive and wanted to pair both time frames at once, you could hold this very heavy risk to reward trade. Personally, I don't like doing this because you will find it is much lower win rate. But when we go and set price to 10 speed and then play it out, we can see that price retraces right into the previous structural range on the lower time frame. And then because we are overall in unison with this higher time frame range, the expectation that eventually this target low will run, slowly but surely we make our way down there and reach the target overall. So now once again, I'm just going to play that video to make sure you guys understand the old analysis and compare it to what we just saw on the charts here. We have the protected high, the target low, the break of structure, and the supply zone. And right about at this level, I was mentioning that we should expect a bearish run towards target. So I'll show you guys that video one more time so we can catch up. And then I'm going to go through and actually do some analysis on pound US dollar and my expectation for the future.
And another thing to keep in mind is now that the weekly is in unison with the higher time frame, the goal based on the higher time frame is to come and take this target. Now, what people do so many times is they see.
So here we are where I cleared out some of the noise on the charts, and we're working now within this break of structure high. Let's change that back to navy. And then this break of structure low that now occurred here. So many of you at this moment might be expecting that I'm going to say pound US dollar is going to retrace and then make a new bearish range here, similar to what we saw before. We're going to actually go ahead to live price here. I'm going to explain to you why that is not the case. So of course, yes, it does follow my line very nicely here. So many of you may be expecting some bearish price on pound US dollar. However, we're going to take a back out here to the monthly time frame, and I'm going to explain to you why it is actually less likely that that occurs. And it's because we need to understand the fractal nature of the market and the fact that the higher time frame controls these lower time frames. So yes, it seems a bit crazy that I'm considering the monthly time frame a lower time frame here, but if we go way back in time over here, we actually see a very, very significant low from 1985 that formed on pound US dollar. Some of you may say this is completely insignificant to the market. Some of you who have a deeper understanding of the markets may realize that a ton of liquidity will rest below a low like this in the market. I talk about it all the time where liquidity rests below those significant highs and lows in the market. And as you can see, for example, there's a low here. Once price comes below it, a very aggressive up move. There's another low here. Right when price gets below it, another very aggressive up move. A high here. When price goes above it, a very aggressive down move. The markets are constantly moving on this general idea of liquidity, and all we're seeing here is a very, very significant low from many years ago that just got purged, and a lot of sell positions have now entered the market. When stop losses are placed below a low like this, they represent sell positions, and now that that has been reached through, tons of sell positions enter the market, meaning that institutions more likely than not have a ton of buy-side liquidity that they can now invest and make capital on pound US dollar from. So no, my expectation after running this low is not that we're going to create another bearish range, but I do expect for pound US dollar to eventually start running these internal highs here, and then making their way up to this inevitable internal high in a very bullish manner. And yes, that does mean I expect a protected high to be broken, but this is because we can use that higher time frame to form a better and more accurate analysis. So based off that knowledge, I'm going to clear my markups here, and I'm actually going to go and set my target at this general range high that we have, and then expect price to move bullish from there. So we're going to dive to a lower time frame now, and what I'm going to do is mark the most recent structural range on that lower time frame, like so. And then we have this general high versus this general low that we're working within. And what I'm going to do is look for the last area on pound US dollar that swept some significant liquidity, and that would be this general low here. Now I choose that low specifically because one, it swept that liquidity I just marked up, but it also did break a great structural high. So my expectation is one of two things. Pound US dollar could get a lot of volume and very quickly go to run this target high. However, because we are in a great supply zone that did break structure, we may see a reaction fairly soon that is likely to come down and mitigate this last area that swept significant liquidity, and then go and run your overall target high. So for those of you who want some more long-term analysis, I can catch up with you in maybe 2.5 years, and we can go over this analysis similar to the last one. And for those of you who may be lost or confused, I want to reassure you, this is not the complexity that's necessary for a profitable trading plan. This is simply just me giving an idea of a long-term perspective on a currency. When it comes to long-term profitable trading, very simple and mechanical trading rules is all that's needed, and you don't need all of this complex higher time frame analysis. With that being said, I hope some of you learned and took some value from this video and can see my long-term expectation on pound US dollar and maybe agree with me or disagree in the comments section. Thank you all again for watching. I appreciate your time, and I will see you guys all in next week's video.